London Market Forums, bringing insurance professionals together.
Good afternoon, everybody, and thank you to Roger and the guys for inviting me here to talk about blockchain. But more really, what I want to talk about is it's just a technology and it's how it can help us in insurance. Because like all technologies, if used wrong, guess what? It's rubbish. If used well, there are some great benefits. So my background is I spent 27 years in insurance, and I don't look that old, but I have. Started off with Commercial Union, and you'll hear about one of the jobs I did when I was there later on in the presentation. But I spent time, about 15 years, doing company turnarounds and fixing businesses. And in doing that, that's where I sort of learned about a lot of problems that there are in insurance businesses, things like why do we have bordereau? Both in policies, but also why do we have them in claims with TPAs, etc. And then why do we have all this reconciliation issue? And why do we have to pass data from one party to another? And why does data go wrong? Lots of things like that. So when I heard about blockchain, I spent a whole year looking at it before I actually did anything to see why can it be used and can it be used. But it was something that sort of really interested me. So what we'll talk about, what is the hype about with blockchain? Why are people talking about it? Right? How can it impact insurance? Because that's what we're really all interested in. It's all about what are the benefits for the insurance business for us. And then I'll use some examples, and hopefully I'll talk through examples as we go through it. What are the problems we have with blockchain? And I'm not going to use the word blockchain a lot in this, but I'll do it earlier, is the relevance of use. The examples that people use aren't very, very good. It's either techie people telling you what blockchain is and going into distributed ledgers, or it's somebody who's got a solution that wants to talk about that solution, but it's not relevant to any problems that are out there. So here's something that was put together for a 5-year-old. There's an explanation in a very well-known blockchain magazine for a 5-year-old. So they thought a 5-year-old understands an apple. So we'll use an apple. And they said if there's 2 people sat on a bench and they pass an apple from one person to another, that's blockchain. Because they know they've passed the apple, they can't argue about it, it's really happened. And you go, okay, fine, it's not really blockchain. Then they started talking about digital apples, and then they started talking about public ledgers. Not stuff a 5-year-old's can understand. So that's where we stop about blockchain, and we don't talk about it anymore. The hype for blockchain really is big. I spent a year looking at it, and you go, it's the first time I've seen a technology that will do for an intermediated kind of business what direct did for retail, and what the web did for retail, and what the web did for direct insurers. If this is used properly, intermediated business could be just as effective as the direct business. And you can start challenging them models on that. Then where do you get to? Then it's all about customer engagement and how you deploy your services. And it takes away call centers, it's face-to-face. And if you integrate it with other technologies like AI and chatbots, etc., you then get to something that's really, really powerful, and your customer engagement completely changes. So, blockchain in the future. Now, people say, what is it? You go, really, it's just a way of storing, moving, transferring any kind of asset. Money, security, IP, certificates, votes.
I'm going to turn this on.
Right. Okay. Can everybody hear me okay? Yeah, sure. So, yeah. And 10% of the global GDP by 2025 will be stored there. Now, if you relate that back to what I said earlier, 10% of the world's assets or e-commerce or transactions, etc., will be on blockchain. So what do you have to do? People are going to want to insure it on the blockchain, so we're going to have to come up with ways of doing that. What blockchain then takes away as well is, whereas before we transact one-to-one, all systems say you can transact one-to-one, but that's what happens. Unless you're all on the same system, the same database, then you might be able to use the same database and you transfer as a number of parties. What blockchain allows you to do is says you can have 10 parties as part of a value chain. You don't have to be on the same system, but you will all receive the same data and the same transactional information as soon as that transaction happens real time. You don't have to wait for it. It doesn't have to go through a central mechanism. Here are some of the applications in financial services that are being built at the moment. The ones highlighted in red are applicable to us in the insurance world. There are applications around brokerage, regulatory and compliance. Some of the sort of core attributes that are built into blockchain order stability, immutability. Once a transaction's on there, it can't be taken away. Transactions are all bonded together. So if you've got a broker and insurer who are interacting with each other, if they actually put a transaction or a piece of information on the blockchain, that's bonded together. It can't be taken away. So nobody can say, I didn't say that, I did say this. It is absolute truth there, and everybody knows what everybody else has said if there's more than two parties in it. So you've got anti-fraud because of the, so let's say, security around it, and then the immutability, insurance applications. Now, when you get to insurance, there are a number of things which are sort of interesting. We've got core applications which apply to general insurance as it is now. London Market, you've got a company called Chain That. We're doing stuff around short-term, on-demand, sharing economy insurance. But then you've also got companies like InsureX and EtherRisk who want to build insurance applications based on cryptocurrencies, but also on digital currencies, which a number of banks around the world are sort of setting up. So those pose a threat to the current insurance world. Why is that? Because these businesses want to set up risk pools based on non-digital currencies. What they're saying is we'll go out, we'll find bitcoins and ether, etc., and we will set up a market equivalent to Lloyd's, where people just want to put together a pool of risk and they want to insure them themselves. And they're going to use the underlying technology that is under bitcoins, under Ethereum, etc., just to build pools which will challenge how things are done at the moment. And if you wonder how big that market is at the moment, they've got $100 billion worth of assets to play around with if they want to build this. So when I first started this, one of the first things I wanted to look at was why is insurance and blockchain suited to each other? So I drilled down to insurance. I said, what's the core of insurance? So you've got four pieces to it. You've got a customer and KYC. You've got your legal contracts, policies, TOBAs, reinsurance contracts. You've got data and value. And the data and value is just transferred between parties. And that's as far as I got to. I said that's the base of insurance. So why is blockchain suited to it? So blockchain, first thing is you have an identity. And in the blockchain world, they call it sovereign identity. And we'll talk more about that a little bit in a minute. The next thing, you have smart contracts. All a smart contract is a programmable piece of language which can imitate a policy, it can imitate a TOBA, it can imitate a reinsurance contract. Any legal contract that happens in insurance can be built in and you can program all the terms and conditions in there. Where it becomes really, really efficient is, at the moment, if we think about TOBAs, they can take quite a while to legally negotiate between two parties. With this, you can transfer the terms and conditions from one party to another, and you may just want to change the percentage, or you can take terms out. But let's say processes that used to take hours, or no, months or hours, can now be done in hours and minutes. So you can transfer a TOBA from one party to another, and you can say this is what we changed in commission, and it's all signed up. And it's executable as soon as somebody says with a digital signature, we're applying that. Policies, you can change a policy from one party to another, home, motor, etc., commercial of any kind, and you can just replicate it, and all you've got to do is change the commission in there, and it becomes applicable. But parties can actually implement those themselves because, as a party, you say, we're going to be bound by this. Verifiable data, because of the way blockchain works, the data is verified, it's transparent, it's immutable, and people know what's there. And then we've got frictionless transfer of value. So this is where, if you listen to people talk about bitcoins, they talk about how they transfer them from one party to another. If you actually went on to buy a bitcoin, you go onto exchange, you buy it, you put your key in, the bitcoins turn up in your wallet. It's as simple as that. There's nobody in between. And all of a sudden, that value can be exactly the same in the insurance world. So this is the identity. What people are creating in the blockchain world now is they're creating identities for each other, or an entity, or a person, or anything that you want. Now that identity becomes one identity, and to that you can add everything. So you don't have different identities with your bank, with your credit card company, with your leasing company. And what you can do with these identities then is you can have external feeds which updates it real time. So if you've got a customer and let's say they've got a factory up north and they've got a big P&L, they input their accounts every year, they do the registration with Companies House, all that can automatically update. So they've got a real identity being updated with their financial information, their employees from their annual returns, etc., can be updated. And what you do with that is you put that together with a digital key. so that if you've got a new customer who wants to onboard, KYC becomes so much easier because they've got a history of insurance, they've got a history of transactions, they've got a history of company accounts. They'll open it up, there's no more form filling. KYC becomes something that happens very, very quickly. I spoke to a rather large broker recently, and he said to me, why would we want to do that? Because it makes it easier for people to choose or take our clients away. I said, well, if you don't do it, somebody else is eventually going to do it, because it's happening in the real world. People are creating identities for corporate customers. Smart policies and TOBAs. This is just programming language. But what you do is you replicate exactly what a policy does and the legal terms in a policy, or a TOBA, or a reinsurance contract. I'll come on to it a bit later on about how these can actually work from a claim perspective, but what happens is everybody signs up to it, and on our system what we've done is we've created a smart policy. So what happens is when a customer pays the premium, it executes, and the brokerage will go to the broker, the premium will go direct to the insurer, and all the bordereau information is fed to everybody real time, so there's no back office processing that goes on. So you can actually make the policy much, much more efficient. You can take away back office processing. So, and to set them up is a really, really simple process. It's not months or years anymore. It is just hours and minutes. Now, where it becomes efficient is where you've got a paper document which requires compliance oversight from humans. You can actually build those into the electronic document. So if you put TOBA together and you say a broker can only write certain risks, and if they've got something that's on the edge, what the TOBA will do is if it's not right, it will kick it out. So people cannot underwrite something that is not part of that TOBA. So it actually acts as a guardian of the insurance business. Now this is, people ask me, what does it really mean? And this is the explanation I used to use. So in 1991, I worked in an overseas accounts department for Commercial Union. And it was one of the most boring tasks I got to do. But it's because I was a graduate that said, you can do that. It was just above photocopying. It wasn't much better than that. But what it involved was, it was called IGANs, Intergroup Advice Notes. And what I had to do is I had to talk to all the companies that were part of Commercial Union around the world when they dealt with each other. And what you filled in was a slip. And it had 5 colours. And it was basically, it was an intercompany debt. So you kept the top one in yourselves. You sent the second one to your group accounting. Third one went to a different company, wherever you're dealing with. Fourth and fifth one went over to the UK, to overseas accounts and central records. The point about it is, though, it was all carbon paper. If you wanted to change that transaction or record, you would have had to travel the world, get those pieces back together, put them together, write on it, then put them all back in the filing cabinet you got them from. That's pretty much how blockchain works. You send a transaction out and every party gets it, but they get their own version of that transaction. So to actually edit it, to steal it is okay, but to edit is very difficult. Hacking blockchain is near impossible. Now we hear about hacks and people stealing bitcoins and ether, etc. What happens there is it's a programming issue. Somebody's left a back door open, but it is very secure. Hacking it is absolutely impossible because it is just spread out all over the place. There is no one place where that information is held. So for an insurer, a broker, a reinsurer, or all the parties around this room, you will have your own version of data which you keep on your servers, and that will replicate what everybody else has got. And every time somebody deals in one of those transactions or updates those transactions, you will all get that information at the same time. But that all comes in without any need to process, because you've set the contracts up and they allow the transmission of information in and out of your business, and they also allow everybody else to receive that.